Welcome to week 4, where we focus on income and beginner credits. This week is titled, Show Me the Money, Income and Beginner Credits, and we're starting an IRS detective case file, The Hunt for Hidden Income. Remember, we learn, we laugh, we file taxes correctly. This week, we're building Tax Pro students into income investigators. We will learn about W-2 income, earned versus unearned income, and how income affects the refund. We'll also cover EITC and Child Tax Credit Basics, IRS due diligence, and how to complete Form 8867 and take proper client interview notes. We are not covering 1099 NEC, Schedule C, or complicated credits like the daycare credit yet. First, we will watch our designated learning video. Let's begin with a quick review of weeks 1 through 3. Review round 1 is detective or dismissed. We'll read a statement and determine if it's true or false. Here are the solutions for review round 1. Single means you have zero legal paperwork connecting you to anybody, is detective. Head of household means any adult with a couch and a dream is dismissed, as you must have a qualifying person. Review round 2 is a filing status speed round. Consider the appropriate filing status for a single mom with 1 child, a married couple living together, a recently divorced person with no kids, and a widow with kids in the first 2 years. The correct answers for the filing status speed round are head of household, married filing jointly, single, and qualifying widow. Review round 3 is the 1040 memory pop quiz. We'll test your knowledge on where W-2 wages go, the schedule used for dependents, in which part of the 1040 shows a refund. For the pop quiz answers, W-2 wages go on line 1. Schedule EIC is used for dependents. The bottom of the 1040 shows the refund amount. All right, IRS detectives, gather your magnifying glasses. Today, we're investigating everybody's favorite thing, money. Where it came from, where it went, and whether the IRS wants a piece. Lesson A covers understanding income, or the money map. We break income into 3 buckets: earned, unearned, and non-taxable income. Examples of earned income include W-2 and tips. Unearned income includes interest and unemployment. Non-taxable income covers child support and gifts. The W-2 form shows wages from work. It is given to employees by their job, showing wages, tips, and federal/state tax withheld. Withholding often means a refund or smaller balances due. Missing W-2s can cause IRS delays, and clients often forget one if they have multiple jobs. The 1099 NEC is for contractor pay. This is for non-employees, freelancers, and gig workers. There is usually no tax withheld, so the client may owe self-employment tax. This increases taxes due unless expenses offset the income. Always ask about business expenses. The 1099-K covers third-party payments, like income received through apps such as PayPal or Uber. It includes gross payments before fees or expenses. This must match reported deposits with actual business income and carries a danger of double counting if the client also has a 1099 NEC. The 1099 MISC is for miscellaneous income used for rent, prizes, awards, and other non-wage income. Different boxes are used for different types of payments. Some income may trigger self-employment tax. Always code the income correctly to avoid misreporting. The 1099-G is for government payments, common for unemployment compensation. This is fully taxable income with no special exclusions. It can reduce credits like EIC or child tax credit. Verify that state and federal 1099-Gs are reported. The W-2G is for gambling winnings issued by casinos, lotteries, and raffles. All gambling income must be reported, even without a W-2G. Winnings raise adjusted gross income and can reduce credits. Losses can only offset winnings if the client itemizes. The 1099-R is for retirement income, including pensions, IRAs, annuities, and 401(k) withdrawals. It shows the taxable portion and any withholdings. Early withdrawals may trigger penalties. Clarify if the distribution was a rollover, as those are sometimes not taxable. The 1099 DIV covers dividends from investments like stocks and mutual funds. Ordinary versus qualified dividends are taxed differently. Small amounts must still be reported. This income adds to AGI but may be taxed at lower rates. Double-check if reinvested dividends are taxable. This slide is for review of the income forms we've covered. Time for a mini game. Taxable or nah? We will read the item, and you determine if it is taxable or not. child support, W-2, interest, SNAP, unemployment, and cash tips. Here are the answers. Child support and SNAP are not taxable. W-2, interest, unemployment, and cash tips are all taxable. Lesson B is a W-2 deep dive, the income ID card. Key boxes include Box 1 for taxable wages and Box 2 for federal tax withheld. Red flags include Box 1 being much lower than Box 3, the wrong SSN, or no federal withholding. Also, watch out for daycare benefits in Box 10. Lesson C covers beginner credits, EITC, and child tax credit. EITC is for those with earned income who meet income, SSN, relationship, residency, and age rules. CTC is up to $2,000 per child age 0 to 16 with an SSN. If the child lives with you and you support them, you might qualify. IRS due diligence has 4 rules for EITC, CTC, and ACTC. Complete the return correctly, ask the right questions, document your answers, and keep records for 3 years. Remember, if it isn't written down, the IRS thinks it didn't happen. You must verify residency and relationship. The 4 IRS due diligence rules apply when preparing returns claiming EITC, CTC, ODC, Head of Household, American Opportunity Credit, and Child Independent Care Credit. Rule 1. Do the return correctly. Prepare it properly based on all information given. Rule 2. Ask all the right questions. If something seems off, ask again. Rule 3. Document everything. Notes save you in an audit. Rule 4. Keep records for 3 years. Keep your notes, worksheets, documents, and Form 8867. Interview notes training. Your notes are your audit armor. Practice writing down key details like where the child lived, who supports them, work hours, and child care provider details. Your notes should include verification methods like reviewing a school report card or utility bill. Training focus. 3 steps to perfect notes. Use this simple, non-negotiable structure for every client interaction. Step 1. Document the receipts or how and when. Start by establishing the due diligence timeline. Record the date, time, method of interview, preparer name, and list all key documents examined. Step 2. Ask the hard questions, the due diligence protocol. Record the question you asked and the client's confirmation. Then, record the verification method used, like a school enrollment letter. Step 3. Note the drama, exceptions and clarifications. If the client's situation is unusual, document the explanation thoroughly, including verification for any exceptions, such as head of household status or side gig income records. Here is an easy memory trick for the 4 due diligence rules. ASKSA is for ask questions, S is for support with documents, K is for keep records, and the final S is for stop and correct red flags. In summary, the 4 rules are: complete the return correctly, compute and document credit eligibility by making reasonable inquiries, keep records for 3 years, and satisfy the knowledge requirement by asking follow-up questions until everything is consistent. Now we will move into a role play and script using TaxSlayer for hands-on practice. All right, detectives, time to get those fingers clicking. We're about to enter a live W-2 together. This is hands-on, so open your TaxSlayer dashboard and get ready. Our first role play is a live W-2 entry in TaxSlayer. We will practice entering a W-2 exactly like you will during tax season. Your client, Tasha Bigflex, claims to have made $250,000, but her W-2 shows Box 1 wages of $12,480, with only $254 withheld in Box 2.